All right, let's dive into Endurance Technologies. Got their Q2 FY25 results presentation and financials right here. Ready to uncover some insights.
Yeah, let's do it.
For anyone who needs a quick refresher, Endurance Technologies, they're a global player in auto parts, specializing in both two-wheelers and four-wheelers.
Right, everything from suspension and brakes to transmission systems, the whole shebang.
Exactly. And they're not messing around. Just look at their consolidated total income, ours, 29.39 billion. That's a 16.8% jump year on year.
Impressive.
Seriously. And get this, they actually outpaced the overall two-wheeler industry growth.
Oh, wow. So what's driving that? Got to be more than just market trends,
I
right?
was thinking the same thing.
Well, think about the global semiconductor shortage. It's been a real pain for the entire automotive industry.
Yeah, true.
A lot of companies struggle to keep up, but Endurance Technologies, they managed to keep their supply chain running smoothly.
That's a good point. It shows they're pretty resilient.
Exactly. They've got a strong operational foundation.
And you can see that strength playing out across their different business segments. Their standalone operations in India, they grew by almost 15%.
Solid.
But their European operations are their real eye-catcher, 9.3% growth in INR terms.
Hold on. Isn't the European car market actually shrinking?
It is, which makes their growth even more impressive.
Wow. Okay. That's pretty remarkable.
And don't forget their subsidiary, Maxwell Energy Systems. They specialize in battery management systems, BMS for short.
Right, the brains behind the batteries.
Exactly. They saw a healthy 12.7% growth.
So growth across the board. But what's fueling those European numbers?
I'm curious about that too. Is it just strong demand, or is there a more strategic play at work?
I'd say it's definitely more strategic. Endurance Technologies has been laser-focused on the electric and hybrid vehicle market in Europe.
Makes sense. That market is booming.
And they've been winning new orders for EV and hybrid components, which is how they've managed to defy the overall decline in the European car market.
Smart move, considering where the industry is headed.
Absolutely. They're thinking ahead.
All right, so smart bets on EVs are fueling their European success. But let's talk bottom line profitability.
Yeah, that's what really matters in the end.
For sure. And the good news is both their standalone and consolidated EBITDA and PAT margins, they've improved.
Oh, that's great to hear.
Just to break that down a bit, EBITDA, that's earnings before interest, taxes, depreciation, and amortization.
Right, and PAT is profit after tax.
Exactly. Key indicators of profitability. Their standalone EBITDA is sitting pretty at 13.6%.
Nice.
And their consolidated PAT margins jumped from 6% to 6.9%. This isn't just growth, it's profitable growth.
That's a sweet spot.
So they're expanding, boosting their margins. It's a pretty rosy picture.
Yeah.
What's behind that margin expansion?
Well, it's a combination of factors. First, they've got improved operating leverage. They're getting more output for every unit of input. They're also being very disciplined with cost management.
Ah, so keeping those costs in check.
Yep. And maybe the most interesting thing is their product mix.
How so?
They're selling a good balance of high-margin products, which gives their overall profitability a nice boost.
All right, smart financial moves. But what about on the strategic front? Are they just riding this wave or actively shaping their future?
Definitely not sitting still. They've started capacity expansions in both India and Europe to handle that growing demand.
So staying ahead of the curve.
Exactly. And one particularly interesting development is this large order they snagged for scooter front forks.
Scooter front forks?
Yeah, it's from a major Japanese original equipment manufacturer, an OEM as they're called.
Oh, okay, so they're supplying parts for a big Japanese brand.
Yep. And they're also building a brand new plant in Chich, Sampajanegar, focused on alloy wheels.
Alloy wheels, interesting.
The plan is to nearly double their current capacity. It's a pretty bold move.
That's a big statement.
Yeah.
So those scooter front forks and the new alloy wheel plant, are those opportunistic moves or part of a bigger strategy?
I'd say it points to a proactive approach to growth. Landing a deal with a major Japanese OEM, that's a big win.
Yeah, for sure.
And the new plant shows they're anticipating future demand. It seems pretty aligned with their long-term goals.
So not just reacting, but anticipating.
Yeah.
Smart. But what really caught my eye was their move into the electric vehicle space.
Ah, yes. Their EV play.
They've locked in orders for EV suspensions and brakes from some heavy hitters in India.
Like,
Ather, Ampere, Bajaj Auto, TVS, even Mahindra. It's like they're going all in on EVs.
you're spot on to highlight this. They're aiming to be a major player in the EV revolution. Those orders you mentioned, they're a clear signal that their EV strategy is gaining traction.
Yeah, it seems to be working.
EV orders are actually a big chunk of their total order book, especially in India.
And it's not just India, right? Didn't they mention a letter of intent, an LOI, from a European electric two-wheeler OEM?
They did, and that suggests their EV push is going global.
So they're growing, expanding, making smart bets on the future. But let's talk about their financial position.
Sure.
They reported a negative net debt of Rs, 3.5 billion. What does that even mean? Isn't debt usually a bad thing?
Usually, yes, but in this case, it's a sign of serious financial strength. Negative net debt means they have more cash than debt.
So it's like having a surplus.
Exactly. Gives them amazing flexibility to invest, expand, and jump on opportunities as they come up.
That's a powerful position to be in.
Absolutely. Especially in such a dynamic industry. It's a huge advantage, especially with their ambitious expansion plans, like that new alloy wheel plant in Samajinagar. It's not just an expansion, it's a strategic play.
Yeah, that plant's interesting. Aiming to nearly double their alloy wheel production to 9.8 million wheels a year. What's driving that kind of ambition? Are they just betting on market growth, or is there something more to it?
It's definitely more than that. They're tapping into a growing trend. Alloy wheels are becoming super popular. In the two-wheeler segment, both in India and globally. People want better looks and performance, and Endurance Technologies is positioning themselves to be the top supplier.
They're not just meeting demand, they're shaping it. I noticed they already have firm orders from key OEMs for that new plan. 6 of India's top 7 two-wheeler manufacturers will be using their alloy wheels. That's a pretty dominant position.
It really is. They've secured a major part of the market, which shows how much trust manufacturers have in their quality and reliability. Their market share has been steadily climbing, from 77% in FY21 to 85% in FY24. That's not just growth. That's market leadership.
So what's their secret? How did they get so dominant in alloy wheels?
Well, they have a deep understanding of the technology and the manufacturing process. Plus, they've been smart about their location. They have a land bank close to their key customers, helps with logistics, keeps costs down. And they've got a proven track record of successfully executing these complex projects.
Makes sense. So leading the pack in alloy wheels, what about their overall order book? That's pretty impressive, right? New business worth orders are 3.73 billion in India alone for FY25 and another euro 24 million in Europe. Any wins that stand out to you?
The volume itself is impressive. But you're right. Some wins are particularly noteworthy, like securing new business from Honda Motorcycle and Scooter India for both suspensions and brakes. That's a big one. TVS is also a major customer, and they've expanded their orders to include suspensions, brakes, and drive shafts, bringing their total business with TVS to Rs, 5.4 billion.
Sounds like they're becoming essential partners to these big players. And it's not just two-wheelers, is it? They mentioned a deal for four-wheeler machine castings from a global Tier 1 supplier worth Rs 0.5 billion.
You got it. Their order book reflects their ability to cater to different needs across various segments. They're not putting all their eggs in one basket, which makes their business much more resilient.
Diversification is key. But let's get back to their EV play. It's clearly a major focus for them, and they seem to be winning some big deals.
For sure. They're racking up orders for EV suspensions and brakes from some of the biggest names in the Indian EV market: Ather, Ampere, Bajaj Auto, Hero Electric TVS, even HMSI. On the braking side, they're working with Ather, Bajaj Auto, Ampere, TVS, Mahindra, and Hero MotoCorp.
They're like the go-to choice for EV components. This wasn't just luck, was it? It seems like a deliberate strategy.
It's a well-executed strategy, for sure. The numbers speak for themselves. In FY22, EV orders were just 12% of their total. Now, in the first half of FY25, that number has jumped to 57%. It's a huge shift, and it shows how quickly they've adapted.
That's a remarkable turnaround. And it's not just the domestic market, right? That LOI from the European electric two-wheeler OEM shows they're thinking globally.
Definitely. That LOI could be huge.
Yeah.
Potentially bringing in Rs, 0.13 billion annually. It validates their technology and shows they can compete globally.
All very exciting. But we have to ask, what about their traditional business, the internal combustion engine market? It's still a big part of the automotive industry. As the world moves towards EVs, is Endurance Technologies at risk of being left behind?
It's a valid concern, and I'm sure they're thinking about it. They're not ignoring the ICE market, but they're definitely preparing for an EV-dominated future. One interesting thing they're doing is developing components for hybrid vehicles, a kind of bridge between traditional and fully electric.
So hedging their bets, making sure they're ready for whatever comes next.
Exactly. Not putting all their eggs in one basket.
Yeah.
They're strategically balancing their exposure to both markets.
Looking at their European operations, it seems like a big chunk of their business there still comes from ICE-related orders. Is that a worry?
It's worth keeping an eye on, but they're already diversifying their European business. They've got large orders from an e-axle manufacturer. That supplies BMW's electric vehicles. And they've won their first business for specialty plastics from Volkswagen. These wins show they're actively reducing their reliance on the traditional ICE market in Europe.
Work in progress. But they're making deliberate moves to prepare for the future. It's interesting they're also looking beyond automotive. They mention LOIs for non-automotive applications like boats and ATVs. What's driving that diversification?
It's a smart strategic move. Expanding into non-automotive lets them leverage their existing tech and expertise in new markets. It also reduces their dependence on the automotive industry, which can be cyclical and unpredictable.
And they're not just testing the waters. They mentioned their first LOI for a non-BMS embedded electronics application, a microcontroller unit specifically. Seems like they're serious about diversifying their revenue.
This move into non-automotive shows their innovative spirit. They're not content with just leading one market. They're looking for opportunities to apply their knowledge in new and exciting ways.
It's pretty cool how they're using what they're good at to expand. But let's be real, no company's perfect. What kind of roadblocks do you see for them moving forward?
True, every business has challenges. For endurance technologies, one of the biggest is probably raw material prices. The stuff they need, like steel and aluminum, those prices can swing a lot, and that can really hit their profits.
Yeah, their raw material costs are a big part of their expenses. So how do they handle that? Are they just stuck hoping for the best?
Well, they're definitely not just sitting there. They've got some strategies, like long-term supply contracts and hedging. But commodity prices, they're unpredictable. There's always a chance that a sudden price spike could squeeze their margins.
So, they're walking a tightrope. What about global stuff? They operate in a bunch of countries. How do things like geopolitical instability or trade wars impact them?
Those are definitely things they have to think about. Geopolitical events can mess up supply chains,
Yeah.
create uncertainty. For example, their European operations are facing the energy crisis and the economic fallout from the conflict in Eastern Europe. Those are things they can't really control.
True, external factors are tough. Then there's competition. The automotive component market is packed. How do they stay ahead?
It's a tough market, and it's only going to get tougher. They need to stay on top of tech advancement, so investing in research and development is key. They also need to be flexible and able to respond to what customers want. The automotive industry is changing fast. They need to adapt quickly.
Agility and innovation are crucial. What about the EV market? It's still pretty new. Are there any risks with their big EV bet?
There's always risk in a new market. The EV market is still developing, and its future depends on a lot of things, like how many people buy EVs, government regulations, and new tech. There's no guarantee that it will grow as fast or as smoothly as some people think.
So it's a calculated risk, but their finances look good, and they seem to have a smart approach. Seems like they're well prepared. What's your overall take on their prospects?
I'm optimistic. They're a well-run company with a good track record. They're making smart moves to grab those growth opportunities, especially in the EV space. And they're also working to minimize risks, diversifying their products and going into new markets.
It does seem like they've got a plan. They're not just following trends. They're building their own future.
Exactly. They're a company to watch, no doubt. They're not just riding the wave. They're building the surfboard.
Well, there you have it, folks. We've explored Endurance Technologies Q2 FY25 results, covered their growth, their strategies, and the challenges ahead. It's a dynamic story, and I hope this deep dive has given you some food for thought. Be sure to check out their full presentation and financials for an even deeper look. Until next time, keep exploring, keep learning, and keep diving deep.